What is going on, traders? Welcome back to the Traveling Trader. In this video, we'll be talking about everything Tesla stock earnings related. Tesla earnings are coming up on Wednesday, October 21st after the bell. So I'm going to give you some insight as to what to expect. We'll go over the chart and then I will give you my Tesla trade. So you will want to stick around to the end to see how I'm trading Tesla around earnings. But before I jump into it, I just want to say welcome to the best trading channel on YouTube. I could not be happier to have you guys here with us. Nobody else on YouTube provides you with the breadth of trading content that we do. We obviously give you the news and the fundamentals, but we also dive into the really nitty-gritty stuff like technical analysis, how to trade options, different option strategies, swing trades, etc. It runs the full gamut. If you get anything out of this video, leave a big fat thumbs up and leave it in the comment section below. Let me know how you're trading Tesla and let us get right into it. So as I said, on Wednesday, October 21st, after the bell, Tesla is going to be reporting earnings. Now, a couple of key things to keep in mind. Tesla has a habit, and in my view, a really good habit, of announcing deliveries before earnings so that on earnings, we are not caught by surprise. So they already announced deliveries earlier this month of 139,300 vehicles, which was above Wall Street's expectations. But obviously, vehicle deliveries doesn't speak to the specifics of income, expenses, etc. But analysts use that in conjunction with other numbers to come up with their earnings estimates. And for Wednesday's earnings report, analysts are expecting an adjusted profit of 54 cents per share for the quarter, which is the highest expectation ever for Tesla. And it also would be the highest reported EPS for Tesla ever. Last quarter, they did 0.44, which was the highest. And obviously, because of the pandemic, analysts were expecting a negative 0.03 EPS, but they came in with a major surprise at 0.44 EPS. EPS, of course, stands for earnings per share. Now, in my view, there is a high chance that Tesla actually slightly misses the 59-cent EPS guidance. And if we take a look at CFRA analyst Nelson Garrett, he said, "We think the expectation is that they will fall short, and we believe that the street will be forgiving, understanding that the pandemic factory shutdowns were the culprit." And I believe so as well. When we talk about these binary events, a lot of them are, most of the information that is known to the public is priced in already. That 139,000 vehicle deliveries, those are already priced in. What Wall Street is expecting in terms of EPS, that is largely priced in as well. The only way that we get major moves up or down on the actual event is if something completely unexpected is announced. Now, in terms of new news stories being unexpectedly announced, one storyline that I'll be really focused on is Tesla's developments in Asia. So not only is Tesla facing growing competition from other brands like BYD or NIO, but Tesla is also hyper-focused on expanding production from their Shanghai factory, and they're looking to enter new markets in Asia. So any sort of guidance that they can provide on Wednesday's call that would be deemed new and significant information could have a positive impact on stock price. So this storyline is definitely one to watch out for. And lastly, before we get into the trades and the charts, one other thing I want to put on your radar is the S&P index rebalance. So if you remember, the last one happened in September. There is one scheduled for December 18th. Now, these dates, especially during the pandemic, these dates do commonly get shifted around just a bit. So it doesn't have to be on December 18th, could be a few days before or a few days after. Point being, there is a rebalancing committee meeting happening in December. And in my view, if Tesla can show enough growth potential and enough revenue without the regulatory credits, we will likely see Tesla being included in the S&P 500 towards the end of the year, which would be the real catalyst because that is an unexpected event. All right, so let's get into the technicals and how to trade Tesla leading up to and after the earnings for maximum profit. Let us look at how Tesla behaved the last few earnings. And here we have Tesla's last 12 earnings. And this is very important to consider. So all the newbie traders and newbie trading YouTubers, think that you can buy Tesla on battery day or on the day of the split or on earnings and make a large amount of money. But again, they don't understand the concept of things being priced in. If you know about it and I know about it, then largely we have been trading it and it has been mapped out onto the chart already. This is exactly what a chart represents. It's a culmination of every investor psychology mapped out onto the chart. Anyway, so going back to this, you see that usually Tesla actually drops on earnings. Only 4 out of the last 12 times did we see an increase, and it was largely due to unexpected earnings, right? But 8 out of the last 12 times Tesla actually dropped on earnings days. So in my view, if you don't already own Tesla right now and it's at $440, there is no point in buying it right now for the short term. Now, if you're a dollar cost averager, meaning you buy the same amount every week or every month, fine. Or if you are a long-term holder and you just absolutely have to buy now and you make the intention of buying if it drops further, fine. But for the short term, if we're trading this binary event, buying now to me doesn't make sense. You had opportunities to buy before. If you're not new to this channel, you know I'm a huge fan of major moving average retracements on momentum stocks and blue chip stocks. So you could have easily bought at the 50-day moving average for a much more optimal entry for sure than $440. So in my view, based on what we've seen, based on the data, based on how Tesla behaves during earnings, you are much better off waiting and not buying if you haven't bought yet. Now, obviously, because we're obsessed with data and data helps us make informed decisions, when is the time to buy? Well, look at after earnings. You see that one day after earnings, we do have still half of the positions almost being red, half of them being green. But 2 days after earnings is usually the optimal time to buy according to data compiled from the last 12 earnings. This is when we start seeing a lot of green. Is usually 2 days after earnings because the stock has had the opportunity to drop. Where is my chart? The stock has had the opportunity to drop after earnings. So if you take a look at earnings right here, where's my arrow? So these E's on TradingView, these represent the earnings dates. And if you take a look at how Tesla behaves, we do see this drop off after earnings. We do see this drop off after earnings. Even before the pandemic, we saw a drop off a few days after earnings. So really, the time to invest in Tesla for the short term, again, if you're a long-term holder, ignore this. You can just buy whenever and hold. But if you're looking for a really optimal entry, the time to buy Tesla is a few days after earnings based on previous history. Now, again, I said in my view, in December, if they include Tesla in the S&P 500, that is an unexpected event that will likely see a major price boost on Tesla. Now, this may be a boring trade. So how do you trade Tesla leading up to earnings or after earnings with options for maximum profit or for more profit than you can get by just buying the stock and holding for incremental gains? Well, here's exactly what I would do, especially if we're not expecting Tesla to have a major up or down day during earnings. If their earnings do come in slightly negative, we expect the market to be a little bit forgiving because of the circumstances. And if they do come above earnings, it likely won't blow anybody away. So in my view, the perfect options play is an iron condor, especially because implied volatility is high during earnings week. So if you look at Tesla's implied volatility during earnings week, so this is for the October 23rd expiry, it's 111% compared to Tesla's current IV of 82.58%. So almost 30% greater than current IV just because it is in earnings week. What does that mean? For you new options traders, higher IV usually means you can get more money for selling options. So in this case, what I'm proposing is selling an iron condor. Now, you probably see me do this quite often. If you are in our trading group, then you've seen me do this quite a bit. And I love iron condors because they're neutral strategies. There's nothing else on the stock market that can allow you to make major gains from neutral moves or from stagnant moves, right? So if we take a look at how this looks, this basically is a range. And if Tesla falls anywhere within this range here, then you get to keep 100% of your profits. And we can sell the 505, 500, 385, 380 iron condor for $130 per contract. Now, that might seem confusing, but all that means is that Tesla needs to remain between $385 and $500. That is a wide range. That is a $115 range. And here's the great thing about advanced platforms like Thinkorswim. If you take a look at the probability analysis for October 23rd, based on a 1 standard deviation move, from today's current price, a 1 standard deviation move up would put you at around $481. And a 1 standard deviation move down from current price would put you at $396. So that would mean that for our range on the iron condor, for this range here, we are well within the 1 standard deviation move with even a few percentage points more cushion. What that means is it is highly improbable that Tesla falls below our low end of 385 or above our high end of 500 by October 23rd. And we get to sell this for a lot of premium because the implied volatility is high. So this is how I'm playing Tesla. You can screenshot my strike prices here. And if you want to know more about the iron condor, you can certainly Google short iron condor or credit iron condor. And one more thing we'll look at to corroborate this trade is how Tesla has behaved on earnings. What were the most violent earnings moves for Tesla? And only a couple of times have they gone above that one standard deviation move. It looks like one time, October 23rd, 2019, and August 1st, 2018, out of the last 12 times. So that means that our range is rather relatively safe. Of course, this is a market, so you got to size accordingly. Nothing is guaranteed. Risk only what you don't need, yada, yada, yada. Anyway, that is it for this video. Go ahead and sign up if you want access to the trade alerts where I send all of my trades. Subscribe to the channel, hit that notification bell, leave a big fat thumbs up, leave it in the comment section below. Let me know how you're trading Tesla. Let's get this money together. Stay safe out there, traders. Peace.